All right. So, can you hear me fine?
Yes.
Yeah.
Okay, great.
Yes, Professor.
Okay, while I'm talking, you can, raise your hand. Always, you can ask question. Stop me if you feel like. While I'm discussing these problems, I'm using version with solutions because that will save me time in calculations, and so I don't need to worry about calculations and ask what is this and what is that. But I don't want you to focus on solutions, right? On this thing in red. So I want you to follow the problem and what I'm talking about, what I'm discussing and pointing out to, and then because you will get this on Blackboard, so you don't need to worry about taking notes or anything like this in terms of these solutions. Okay, so let's go to our chapter. I hope most of you have actually reviewed this already and tried to solve these problems on your own, because this gives you an idea of I mean how well you know your things. So okay, when you're looking at the problem, these are kind of just tips, right? Just has nothing to do with the content of the class, but when you're looking at the problem, for example, let's say this first problem right away. I want you to read the problem, quickly scan the problem, any problem you're doing. I want you to quickly scan the problem and then go straight to the question. Because a lot of times we have a problem that might be a lengthy problem, a lot of information there. But not all information is relevant actually to you and to the question. So instead of wasting time to go through the whole problem, now this is dangerous also in a way that what I'm saying now is then, you skip important information. So you cannot skip important information, of course. But what I'm trying to say is you scan the problem quickly. What is this problem about? You get the idea. What is this problem about? And then you go straight to the question. And then you know, oh, okay, this is what I need to find. Of course, then you need to know what, how to solve the thing, right? You need to know the concept. But in that case, you don't waste time in let's say copying things on paper or figuring out how does this figure out in this problem, or when the question is something completely that it's not using that piece of information at all. So why would this be? You might say, why would I have a problem with a lot of different information that is not relevant? Well, that's part of the knowing of what is relevant and what is not relevant. It's testing your knowledge. Anyway, so question number one. So this company is manufacturing toys, right? And it has manufacturing overhead cost of something like, okay, so let's go, let's practice what I just said. What is the over or under applied overhead for 2013? Now, immediately, now, okay, I'm looking for over or under applied overhead. So I need applied overhead and I need actual overhead. So I can compare them because that's what you're looking for. So now you need applied overhead and you need actual overhead. Okay. And the actual manufacturing overhead costs were this. So you have this piece of information. Very good. So now I have this. So let's see what the applied overhead is. Estimated manufacturing overhead 25. Remember, estimated is not applied. So that's not what I'm looking for. Variable overhead of 16, fixed overhead 900. Applies manufacturing overhead based on direct labor hours as base. And estimated 10,000 hours. And okay, and what else do we have here? We have actual labor hours of 20,000. Okay, so now you know what you need to do. I need to find applied overhead. How do I find applied overhead? Well, first I need to find POHR, and POHR is here, right? So we will use solutions just to save us time in terms of calculations. So we will divide estimated overhead by estimated hours. So that will give us $250 per hour, per direct labor hour. And then to get applied overhead, we know that we need actual labor hours, and actual labor hours are here, so 12. So we will simply multiply 250 by 12,000. This will give us $3 million. Now we have 3 million here. In applied, we have 2.9 million here. In actual, we have 100. Again, you can use debit credit side or not, or it doesn't matter. You know that applied is $100,000 higher than the actual, which means we over applied for $100,000. So this is a very basic, simple, straightforward question. It should take you no more than a minute to solve this question, right? If you know your chapter 2, for example, just basic overhead thing. Any questions? Just I'm not going to ask all the time any questions, but if you have any questions, just raise your hand or just start talking. Okay. Question 2. The following information was taken. A lot of information. See, I'm not going to go to every line through this information. I'm going to go straight to the question. What was the cost of goods sold? All right. Okay. So now I know what I need. Cost of goods sold. What's the cost of goods sold? Well, what goes into cost of goods sold? What goes into cost of goods sold, depending, what type of a company is. If it's a merchandising company, then it's basically just a merchandise, right? But if it's a manufacturing company, which this looks like here, like a manufacturing company, then we know what goes into cost of goods sold. Materials,
raw materials, direct labor,
and manufacturing overhead, right? So those are the 3 things that go into cost of goods sold. But we also have some accounts that we have to go through. So again, that's chapter 2 and 3. So this is chapter 3, kind of flow of costs, right? So now we know we have to deal with our inventory accounts. Now we always have to be careful with materials and with labor too. Are they direct or are they indirect? Now in this case, we are not told anything about indirect materials. So we will assume that this is all direct materials, and it will go directly straight to work in process. So we will say here $200 in the beginning, and then we purchased 1,500. So that's 1,700. And at the end, again, I'm going to go quickly through this, and I'm not going to write everything next to it. The solutions are below, but you will do it the way it works for you, right? So as you can see, I'm not using even debits or credits or anything, but that's up to you. So 200 plus 1,500 purchases, that's 1,700. Minus 300 in the ending inventory, that's 1,400. And that's exactly what we have here, 1,400 in raw materials. In this case, it will be full direct materials because we are not told anything else. So we will simply say $1,400 is direct materials. Again, be careful. If let's say $100 out of these 1,400 are indirect materials, then your direct materials would be 1,300, right? So that would go straight to direct, to work in process. But these 100 you would basically ignore because they are part of the applied overhead, right? Applied overhead. So you need to review this in case you need to review this. Now, direct labor here, we have 1,800 straight, so that's that. And then we have manufacturing overhead. Also, it should probably say in questions on the exam, it will be very specific and it will say applied, right? Because you might say, well, I don't know if this is applied or actual. Well, in this case, you would have to assume it's applied. I mean, how are you going to make the product? If you have to compare anything, or I mean, you have to use manufacturing overhead to make a product, to move something to work with. So you would assume that this is applied. But on the exam, it will be specific and precise. So this is applied overhead, right? 2,300. So now we will add up these 1,400, 1,800, and 2,300. And these are your total manufacturing costs. That's what somebody asked earlier. What's the total manufacturing cost? That's your manufacturing cost. These are the costs that you are adding in this period to your working process. Now, in working process, you already have $800 here as a beginning inventory, right? The beginning amount. So you will add now these 14, 18, and 2,300, whatever they amount to, 14, 32, 55. 55, okay. You will add 5,500 to these 800. That will give you 6,300. 6,300. But because you have at the end here 300 in the ending amount, then basically your cost of goods manufactured are 6,000. So this is the answer to the second question. What's the difference between total cost manufacturing and cost of goods manufactured? Cost of goods manufactured is what you actually completed, and it's moving to finished goods, right? It's moving to finished goods. And then we have finished goods here, beginning balance. That's the word I'm looking for. I don't know why it was escaping me. Balance. Beginning balance of 1,200. We will add these 6,000. Those are the units that we finished in this period. So this gives us a balance of 7,200. But we have ending balance of 1,000. So basically our cost of goods sold are what? 7,200 minus 1,000, 6,200. Okay, 6,200 here. So that's the, this is a little bit longer problem, but just because it takes you just things to go through, the time to go through steps, but it's a very straightforward, simple problem too. Any questions? All right, everybody's good, very good. So these are all basics, all basics. Next question. This company has the following estimated cost for the year. Okay, what are these costs? Let's see if we care about all of them and what's going on. What's the question? Complex estimates if overhead is applied on the base machine hour, the predetermined overhead rate per hour will be what? That's the question. This is the answer, right, already. But of course, the question ends here. So we are looking for predetermined overhead rate. Predetermined overhead rate. Now, if we know what predetermined overhead rate consists of, right? How do we figure it out? Well, we need estimated hours, whatever the base is, and if it's applied based on machine hours in red, then these are the relevant hours, not these, because we are basing our rate on machine hours. So 20,000 here are relevant hours. And what else do we need? We need estimated overhead, right? So now we have to be able to figure out what goes into overhead. So you say direct materials, are they part of the overhead? No. Direct labor is not part of the overhead. Sales commissions, are they part of the overhead? No. Salary of production supervisor, yes, that's part of the overhead. Indirect materials, yes. Advertising expense, no. Rent on factory equipment, yes. And we have it here, added up these three amounts, $56,000 divided by 20. The answer is 2.8. So you need to know what goes into overhead, what type of costs go into overhead. This is chapter 1, right? Chapter 1. Very straightforward, very simple question again. Okay, let's go to the next question. See, I jumped immediately just by looking at this, scanning this quickly, a lot of numbers here, a lot of information. I jumped straight to the question because I don't want to waste time looking at all of this, every single item here. It will take me 5 minutes. I'm going to go to the question and see, you know, if any of this is relevant to me or not. So what's the question? Contribution margin. Okay, very good. Contribution margin, right? So now I know what I'm looking for. See, because here, because I'm trying to let some people in from the waiting room. So because here you see this traditional income statement gives you the traditional income statement, meaning it gives you gross margin. So now if you spend time thinking about this too much, you know, you're just wasting time. You'll figure out the answer eventually. But so what are you looking for if you're looking for contribution margin? Well, you just need revenue and you need variable expenses, right? You need revenue and you need variable expense. The revenue is here, $1 million. That's it. Revenue is always revenue. And what are the variable expenses? Well, variable expenses are here, right? Now, they might be, again, presented in different ways, but basically you find variable expenses. So cost of goods sold is a variable expense. It doesn't say anything here that this is a manufacturing firm, or so you have to be careful. You know, direct materials are variable expense, direct labor are variable expense, but manufacturing overhead is not fully variable always, right? Piece of it might be fixed, piece of it is variable. So you have to be careful. But in this case, you don't have any of that information, for example. So you know it's kind of, you're probably dealing with a manufacturing, with a merchandising firm. So you have your cost of goods sold here of 300. You have your selling expense of 200. You have admin expense of 25. You had a nice exercise, I believe, for homework or for in my narrated exercise where you actually had to figure out when things are missing, like there are question marks, like here, there's a question mark here, or there's a question mark here. And now you have to figure out, well, what are these amounts? And then that way you learned how to get it from some totals, right? Or from going backward from net income, things like that. So those are good exercises to look at. So variable expenses add up to 525, so you get your contribution margin of 475. Again, this would be like a free problem. Everything is given to you here. You're told here what variable expenses are, basically. So there's really nothing. This would be like a problem, like 15 seconds. Or okay. Well, this would be a little bit longer problem. Again, details, so you have to pay attention. And you have to know things, right? And it would take a little bit more time because, again, calculations and just to check everything is working. So we have this dollhouse company that is making dollhouses, large and small. They utilize, you have to be, yeah, so you see, like, you cannot, well, you can skip here to the question right away, but this is what I said earlier. So the question is here, what's the cost of one small dollhouse under traditional job order costing system? But that doesn't mean, right, that you just kind of skip important information. So what's the cost of under the traditional job order, what's the cost of one small dollhouse? Be careful, not just overhead, but the total cost of each unit. And we know what goes into total cost: direct materials, direct labor, and overhead applied, right? Overhead applied. So you might focus right away because that's the kind of where it takes a lot of steps. You might focus on overhead. Now, if it happens to be the answer, you see here, you have $60, and the answer is, let's say here $60, and you say $60. Well, I mean, that would be kind of trick, but to fool you, but it would be your responsibility, right? You say, well, $60. No, it's not $60. $6 is just overhead, right? So you have to, in this, yeah, if we are looking for small dollhouse, it would be $60. So you have to add up everything together: direct materials, direct labor. So how do we figure this out? Well, we are looking for small dollhouse. We are looking for total cost, meaning materials, labor, and overhead. And overhead is applied based on what? Utilizes traditional overhead. They are considering switching for a large small dollhouse. Overhead is applied based on machine hours. Machine hours. Okay, so we have to look at we have to find our POHR. We have to find actual hours that this doll uses. Since we are looking for just one small doll house, we will just use those hours for the small one doll house. So we have what? We have a total manufacturing overhead 780. How many are total machine hours? Remember, you need to use total machine hours. Now, how many machine hours do we have? Well, we are not given directly number of machine hours, but we are told that large dollhouse uses 3 hours and small dollhouse uses 2 hours. And they produce 2,000 large and 10,000 small dollhouse a year. So you have to calculate your own machine hours, right? So that will be 3 times 2,000, that's 6,000, and 2 times 10,000, that's 20,000. So 20 plus 6, it's 26. That's here, right? 26,000. So 26K machine hours. So you divide 780,000 in this overhead by 26,000 hours, you will get $30 per machine hour. That's the rate that these dollhouses are using, both of them, large and small. It's just that the small one is using just 2 hours per unit.
Professor.
Yes.
The
Yes.
answer is B or D. Is 30 or 105?
Well, I just talked about this. First of all, this
30 is predetermined overhead rate.
First of all, POHR, thank you, whoever is saying this. $30 is just a POHR. That's nothing. That's nothing. That's not even overhead applied. That's nothing. It's just POHR. Now
Okay.
we will find our applied overhead. Applied overhead is what? POHR times actual hours. What are the actual hours for small dollhouse? Small dollhouse here. Well, it's using 2 hours. 2 hours. So we will say 30 machine hours per hour times 2 hours. That's $60. $60. And they are here, $60. To these $60, we will also add direct materials and direct labor. And the total will add up to 105. That's our answer, right? If we were asked for large house, well, we would just multiply 30 times what? Times 3 hours, because large is using 3 hours. So that would be $90 then, $90. And we would add $90 here in overhead. We would add to this $30. Actually, no, I'm sorry. The large one is using $50 in materials. So we will add $50 and we will add 25 here for labor. So we would get something else. We would get what? 140, 165. So 165, for example, would be for the large dollhouse, right? Everybody good? Okay, so this is again this is straightforward, but a lot of detail, right? A lot of detail, a lot of things to keep track of. Which house? Small house. What's the allocation base? Machine hours. Okay, and then you set it up in your head like this, and then you start putting things down. Of course, you have to know that POHR is just a POHR. You have to use it to figure out your you applied over to this dollhouse. Now this question is using same basic data, except that it's asking how much is the small dollhouse if we use activity-based costing. Now we are in chapter 4 here, right? We're in chapter 4 here. So we will say, okay, chapter 4 now, ABC costing. Now you can see that our 780 is split into 3 different activities, these 3 different activities. And in red are our POHRs, right, for these 3 activities, right? How did we get these POHRs, 58, 4, and 320? Well, we divided total here for the labor into total again. Again, do not explain this in exercises, and we went through this in our reviews. You asked a small doll house, but you will not divide this into just small doll house, right? Because that would just take you back to 580 later. Or actually in this case, because you're not looking for the total, it will give you a different rate here, which will be wrong. And then you would multiply it by the activity base, but yeah, it would take you back. But let's say you're given per unit, then it would give you a wrong answer, right? But in this case, we just take you back to 5.8. So now, what if you weren't given these totals here? What do you do? What if you're not given these totals? Then what do you do? Well, you add up these two, and that will give you the total. That will give you the total, which is here 10,000, etc. Right? That will give you the total. So information is there, so they don't get, you know, like confused all by, well, where is my total? Well, the total is here. 4 plus 6, it's 10. 6 plus 20 is 26. 1 plus 200 is 300. Okay. So we will find our rates again, divide total by total. We will get 3 rates. Now we will multiply these rates by what? By what we are looking for, small, 6,000, 20,000, 200, right? Let me see if the solution is below, so we don't need to bother with calculations, right? So 58 times 6,000 plus 4 times 20,000 plus 320 times 200. These are the rates, and this is the activity for the small doll house. And we will divide this into 10,000 small doll units. Why? How do we know that 10,000? Well, we know it from here. 10,000 small doll units, right? And we will get 49.2 small doll house. Small doll house in overhead. Of course, labor and materials will stay the same, 30 and 15. But as you can see, our cost of the small doll house would go, what, down to 94.2 instead of 105 here. So for example, the question like this might have all of this information. That would be a longer question, a little bit more difficult question. You know, and ask you, well, what's the difference between the cost of small and large doll house? What's the difference in cost? Well, the difference in cost is under traditional and under ABC. Well, the difference in cost is 105 here and 94.2 here. So that will be what? 95.8, 10, 10.8, right? So that will be the difference. So the answer would be $10.8 lower under ABC than under traditional. So that will be one of the answers, let's say in a multiple choice question, or you have to fill in something, you would say 10.8 lower, or right. So this will be a little bit longer question, a lot of detail. Any questions about this one? These two. So this combines, right, two chapters. Chapter 4, I mean ABC, and basically chapter 2/3.
How did you know to divide by 10,000?
In which case?
The after we added the OH applied and then we divided the 10,000 small doll units.
You mean here?
Number six.
How did I know to divide what?
I see it.
580?
Yeah, I got it.
580. All right. Well, you know we have to divide it into total. If that's the question, that's something that you need to know. Now, as I said, if this number is not here, or this number is not here, or this number is not here, you would have to add up these two numbers to get 10,000, or these two numbers to get 26, or these two numbers to get 300. And then you would divide these totals into those numbers. So again, it's all about fundamentals, all about basics. There's nothing here that is kind of new or unfamiliar. It's just basics. Okay, question 7. At break-even point of 400 units. Okay, let's go straight to the question. So I see already here break-even. That's chapter 6, asking me about something about break-even. What will be the first units sold contribute to profit? What will the one additional unit contribute to profit? I mean, you can go through all the total and figure out the whole thing for 400 units, right? For 400 units, what will be the profit for 400 units? You might say fixed expenses were 2,000, but you don't have here like, you don't have information like revenue, and then you have variable expenses, and you have fixed expenses, but you don't have revenue, for example. So that would be kind of hard to go through a regular what is called, but you can. I mean, let's look at this in a basic. So, but we don't know what the income is, right? We don't know what at break even. All right, at break even. So let me show you, for example, how useful the contribution format is. If you know what break even is where the profit is 0, right? So this is your profit, net operating income, 0, right now at this current situation. Now, you're told that fixed expenses were 2,000. So you put here 2K. Well, how much is your contribution margin now? It can only be 2K. Why? Because 2K minus 2K will give you 0. So you see, you're not told anything around this here, but you're told it's break-even point. So at break-even point, you have 0, you have fixed expenses 0, you have contribution margin of 2K, and you have variable cost of 4K. Well, what was your revenue then? What will give you 2K if you deduct from it 4K? Well, it's 6K, right? 6K. So for example, this is how useful just the format is. So I always encourage you to use the format. If you're not comfortable with other ways, kind of just algebra or these shortcuts or equations. So we know that this is breaking. We know that these are the sales. You don't need to do this for this problem. I mean, this is kind of extra work, but it depends how different people are, you know, comfortable with different things. So now you say, now the question is, what will one extra unit? But from this, you see, you can figure out what's the price per unit. You would divide 6,000 by 400. So you would get price per unit, right? Price per unit. It's not here, so I'm not gonna go calculating it. You would get price per unit. You would get, yeah, well, you know here that your variable costs are what, 10 per unit, because 10 times 400 will give you 4,000. And you know that here are what? They are what? 5, 2,000, 5. So actually, you know that price per sale is what? 15. 15 minus 10 is 5. So you know that contribution margin here is 5. That's it. Per unit. Well, if you sell one more unit, fixed costs are staying the same, how much will your profit go up? It will go up for $5. Right? It will go up for $5. So this was a longer way, but kind of more fundamental way to solve this, to understand what's going on. Now, here the solution says simply, well, if you know your break even in units formula, you say fixed cost divided by CM per unit. Well, you know this amount, that's 2,000. And you know this amount, that's 400. So this amount is 5. Right, it's here. 2,000 divided by 400 is 5. And why? Well, because contribution margin, as we can see here, is the same as fixed cost. It has to be the same at break even. All right. You need to know chapter 6. I talked about this the review on Thursday. You have to get ahead. You cannot wait until start studying until the homework is due or something. That's too late. Question 8. Danish consulting company bills clients by the hour. What's the question? How many hours must it to break even? Well, to break even, we know what the break even is. How many hours? So that's the question of quantity, right? Question of quantity. And formula is here. Fixed cost divided by contribution margin per unit. So we need to know fixed cost and we need to know contribution margin per unit. Well, fixed costs are here, 300,000. What's the contribution margin per unit? Bills clients 250, variable costs are 100, that's 150. Variable costs are 150. I mean, contribution margin is 150. So 300,000 divided by 150 is 2,000 hours, right? That's that. Again, you can use the format, you know, but you will have open book exam, so, you know, this should not be a problem. This formula here, break even is equal FC divided by CM. But you can definitely use the format that I just did here above. You know, I mean, it's just taking you longer, that's all. But maybe you should do the format while you're studying and preparing for this and kind of, and other, not the shortcut, this shortcut here, but the basic equation, how to get to actually this formula here, because it helps you to understand, right? That's all. Okay, G. Goris, go ahead.
Would you recommend that we use the longer formula just to for the better understanding?
I mean, that's exactly what I just said now. That's totally up to you, right?
Yeah.
Again, since that's totally up to you. Whatever you're comfortable with, and the best thing is to know all kind of different ways that I describe in the lecture that I use. But that's totally up to you. I mean, it's your call. Like again, students, when it's a live exam, then how am I going to memorize all of this and this? Well, first of all, it's not so much to memorize, but I understand. But then it's good to know the basic, what you just said, the basic formula, because then you can just manipulate things and work around things, and you would arrive to this same point. But,
yeah, definitely.
Right. But 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 in this case now you will have it right in front of you somewhere. You should
Yeah.
put it down on paper. But the one that I really also recommend always is the one that I just did in question 7, the contribution margin format kind of visual thing, really. So you're just plugging in numbers, right? You apply it now. Here too.
Okay, Professor, thank you.
I mean, you figure out here, for example, well, it's not like everything is given to you. You have to know things, right? So you would say if fixed cost is 300, right? Here, if fixed cost is 300, for example, well, at break even, 0, how many hours they must build to break even? Well, fixed cost at 300. No, hold on a second. Put it too low down below. If fixed cost is 300 and this is break even here, well, in that case, your contribution margin is 300 also. The contribution margin is 300 also, right? So now, if you are selling it for 250 and your variable costs are 100, that means your contribution margin is 150. So 300 divided by 150, that's the number of units, or number of hours, 2,000, right? So you don't even need to know this formula here. Why? Because you understand that fixed cost and contribution margin are the same number, equal at break even, right? So, but clearly, definitely G, right? I don't know if G is the first name or last name. You use whatever you're comfortable with. That's the
Okay,
best.
perfect. It's more about the timing, I would guess. But thank you.
Right, right. In this, I mean, it depends, you know, if there are a lot of questions, which there will be more questions on the exam than usual, because the questions shouldn't be as complicated, and also because it's online, and you know, it's kind of, we have to deal with different things here. But it's more about time, right? It's more about time. But you cannot be sloppy. Also, you cannot be sloppy. So when I said, you know, when I said go straight to the question, well, that assumes, well, you kind of recognize what's going on, and you understand, you know what you need to do. You know what a part of this topic is. Now, if you don't know what's going on, then it's, I mean, then it's kind of helpless, right? But saving you time. Question 9. What's the question actually? What's the margin of safety? Well, if you have a question, what's the margin of safety? You know right away that you need 2 things. What's the margin of safety, right? Again, I would like to ask you questions, but then we would spend a lot of time on the review. This is not maybe as much fun as in the class. So I'm just going through answers myself. What's the margin of safety? Margin of safety is the difference between our sales, current sales or revenue, and our break-even sales, So this difference here in between is margin of safety. So you know right away that you need your current sales and you also need break-even sales, right? So let's see if we have them. The profit has a target profit of 100,000. That profit requires unit sales to be 2,000. Okay. Now, what else? Variable cost, fixed expenses are 50, achieves if JCC achieves that target profit, what is the margin of safety? So we are saying in the case when JCC is making 100,000, so that's these sales, we need to figure out, compare these sales at 100,000 in profit. We need to compare it to their break-even point at the current cost structure, right? So so basically we need to find both now in this case. So what are the sales at 100,000? What are the sales at 100,000 profit? Well, again, the answer is here down through the formula if you want, but again, through the format. Well, if the profit is 100 and fixed expenses are 50, that means contribution margin is 150, right? And if contribution margin is 150, what else do we have? We have variable cost of 100, and we have 2,000 units. 2,000 units are here, 2,000 units are here, and 2,000 units are here. Okay, so if we have $100 per unit in variable cost and 2,000 units, that's 200K. 200K. So our sales are 350. Okay, so we have these sales here, 350. Now we have to find break-even sales. Well, break-even sales should be easy because now we know that, first of all, we know already here, 150 divided by 2,000, that's contribution margin per unit is what? $75, right? $75. Or we can say 350 minus 150, right? So 150 is the total. For a moment, I got bamboozled because I'm thinking that these are the units, 350, 200. No, these are the total, 350K, right? 350K. So now we have 150K divided by 2,000 units. That will give us $75 per unit. And now we have, of course, here 50,000 in fixed cost, and this will give us 666.66 units. And if we have 2,000 units at our sales here, and here we have 666.66, that difference here is 1,300 units, 1,333 units, right? We could have found sales also at break even and then just divided it into, so we could have said here break even is this, and then this is 50, and this is also 50 then, so contribution margin is 50, right? But if we know that from this here, the ratio between 150 and 350 is something, whatever it is, let's see, what would be the ratio of 200 divided by 350? That would be probably easier. 35, 60, less than 60%, right? So let's just say whatever it is, 40. Let's say it's 45% ratio for the contribution margin. Well, if it's 45% here, then we know what the sales would be, right? If this is 45%, let's say, of our sales, that's the ratio of, it would follow the same ratio as here, right? The ratio is staying the same, nothing is different. So we would have some ratio here, let's say 45%. So this would be 45% of something, right? And that would be this number here. And then we can find the difference between 350 and this number here and simply divide it into price. That would give us the number of units, which would be should end up same, 1,333. Any questions? So
The
then when
answer
you
you have in dividing,
I'm sorry?
the answer, can you just go over the answer one more time, how you got that after you got the break even?
After I got break even,
Yeah.
well, the units are here. The answer, which answer? The units are here. So you have break even units here at 666. You would simply deduct this because that's the margin of safety difference. These are the units at 600. These are the units at break even, 666 here, 0.66. At 100,000 profit, 2,000 units. The difference is 1,333. What I did in a second, in a different version, right? I said you can go through total sales. So you had sales already, 350,000. Well, now you would have to find sales in break even, and actually they're here. 116,665. So I will leave this to you to figure out how to get 116,665. And that was just simply algebra saying, well, contribution margin was 50 under break even because fixed costs were 50. So now there was some ratio, which again, I don't know if somebody has a calculator, they can tell me what the ratio is of contribution margin to sales. So the break-even sales would simply then be this, when you do 50,000 divided by that ratio, right? Anybody has a calculator? 150 divided by 350, what's the ratio?
About 43%.
Right, I said 45, so that was very close. So 43% would be the ratio, right? So you had here, using the same format, you had here 50 in under break even, you had here 0, and then you had 50 in fixed cost, which would give you your contribution margin of 50. Now, what is 50? 43% off. Well, some number here, these sales. Well, you would just say 50 divided by 0.43. And that would give you those sales, which are actually down below 116 something. 116 something. And then you would divide those, not divide, but deduct those 116 something, 665 from 350. Again, that's just another way of do this. And then, of course, you would have to divide these 233, 275 by price, right? Price to get 600, to get 1,300 units in margin of safety. So that's actually a longer way to do this, but some people might be more comfortable going that way instead of let's say going through this here. Formula, if you want to call it, or this shortcut, right? So different people like it differently, and I appreciate any way you can do it. It's fine as long as you're getting correct answer. And actually, in a way, again, this is just kind of, well, especially now with open book, you just have this, you're just plugging in things, so you don't necessarily even have to understand it, what's going on. But if you're doing it the way I did it a second ago, or through what somebody asked G about, going through the whole formula, like here, you actually, you actually understand the thing, why it's happening. So that's how you should practice too. Question 10, what is Rory's net operating income, net or net operating profit? Well, this is just, here multiplication, sales, 3,000 pairs of shoes, sales price is 70, variable cost 50, which means your contribution margin is 20, right? 20 times 3,000 is $6,000 or $60,000, sorry. Minus fixed cost 25, so that's profit of 35. So that's like 15 seconds question. If the dollar contribution margin unit is increased by 10% in this thing above, total fixed cost decreased. We did a lot of these in the narrated lectures. When things are changing, this is also kind of a free question, right? So 10% increase in contribution margin. And if total costs are decreased by 20% and all other factors remain the same, net operating income will go where? Of course, it will go up, right? Well, first of all, contribution margin is increasing. That's great news for us. On top of this, fixed costs are decreasing. Well, that's even better. So we are getting double bonus here, double benefit. So we have if our contribution margin here was 20, 70 minus 50 was 20, 10% increase would be 2.2, right? Or actually 22, I'm sorry, $22, 20 to 22. And then fixed costs decreased by 20%. So that would be $5,000. So our fixed cost new would be 20,000 instead of 25. So we would now have 22 times 3,000. That would be 66 instead of 60 before. And we will have 20 here. So the total would be 46, right? The question is, what will be the difference, the increase or decrease? So this is not the answer, right? The answer is increase of 11,000. What is this? Is the process of analyzing costs, uses high-low method. Even if you're not told, uses high-low method. I mean, you have to realize kind of how can I figure this out? How would I figure out what will be the cost when they sell 100,000 units? Well, the only way to figure, I mean, there's no other way for me to figure it out. I cannot guess. I have different amounts here. None of them are 100,000. So I have to use some kind of averaging something, right? And we learned this in chapter 6, high-low method. So you don't even need to be told that this is a high-low method. This is just kind of a bonus here to tell you, well, use high-low method. So you will use high-low method, you will find, again, you will not start with amounts. You will not start with amounts. Most of the time they will correspond to high and low, but you will start with activity, we said, right? With activity. You will look for lowest and highest activity. Lowest is 50, highest is 120. Amounts that correspond to this are 1,000,007 and 1,000,000. You will find a change between these. We said, and change is what? Here is 70K, and here is 700K, 700K. So now we are looking for variable portion first. So 700K divided by 70K is $10. This is our variable piece, $10 per unit, $10 per unit. Now we will plug in these $10 per unit into either one of these, 50 or 120. And this is basic high-low problem that you should review in exercises. And actually the exercise is much more complicated than this, but just a lecture portion, 6A. So now we, let's say, use the lowest one, okay? So that's 500K, 10 times 50 is 500K. This is our variable piece, right? Variable cost, variable portion. Now the total here is 1 million. So what's the fixed portion then? Well, then the fixed portion is also 500K. They have to add up to the total, right? 500 and 500 will add up to 1 million. If you had chosen the higher one, you would say 10 times 120. That would be 1.2 million. 1.2 million in variable. Well, 1.2 minus or 17.11 minus 1.2 is 500K. So you see, you get, because your goal is to find fixed cost, you get the same fixed cost, 500. So it doesn't matter which one you choose here. You will get $500,000 in fixed cost. So now you have your formula, and the formula is $10 per unit plus 500K in fixed cost. Again, those of you who already went through this, and this is very basic, and there's nothing really to it. So now we are looking at 100,000 units. Well, those are the units here, 100,000 units. So that's 1 million. 10 times 100,000 is 1 million plus 500K. That's the answer, 1.5 million here, right? Very, very straightforward. Very straightforward. Okay, let's move on to the next. Let's move on to the next question. Same thing. So we don't need to actually spend a lot of time on this one.
Professor, I'm sorry.
Yes.
Go back up really quick so I can take a picture of that calculation in red for number 12.
Okay.
Thank you.
Well, you will get this. I said you should not worry about this. I will post this online. So give me just a second, please. Give me just a second. Okay, so this is the same basically problem. So we don't need to go through this whole thing. You just pick high and low activity, high and low cost, and you will go through the same procedure. Question 14, a company sells a single product. Let's see what the question is. What number of units must be sold to generate? And I go, okay, so we know we need, we're looking for units, so we need contribution margin per unit, or we need contribution margin ratio. Anyway, we need contribution margin, and then we will get sales and then divide it into number of units or something like that. But basically, the easiest way would be to just find contribution margin per unit. And we are selling thing for 50, variable costs, manufacturing at 20, selling at 10. So that's total of 30, right? So that's here, 30, price is 50. So our contribution margin is 20, right? Now, what is our fixed cost? Fixed costs are 80, and target profit is 100,000, right? So the shortcut again is target, same like before, not target, but total fixed cost here. Same like before, fixed cost divided by CM per unit. Well, now we'll just add target profit to this, right? So that will give us the total, and that will give us the total of 9,000 units. I mean, we can go through the whole equation, this, and see that we end up in the same spot. The whole equation is derived, I mean, this shortcut is derived from that equation that says, well, profit or net operating income is equal to what? Revenue minus cost, right? So now, if our profit is if our profit is 100,000, we are told our profit is 100,000. We don't know what the revenue is. We don't know what the revenue is, right? And we don't know, well, we actually know per unit, but we'll get to this in a moment. Variable total cost, but we know that fixed costs are 80K. 80K. Now, what is this here? Well, this is 50 times quantity units minus 20 times, I'm sorry, 30. 20 plus 10 times quantity units. And this is our contribution margin, 50 minus 30. 50 minus 30. So we end up with 100K in profit is equal to what? $20 times quantity that we are looking for, minus 80K in fixed cost. Well, when we move this to this side, we get 180K. 180K is equal to $20 times quantity. And then now we divide these 180K by $20 in quantity, we get quantity of 9,000 units, right? So that's how we derived actually this shortcut here. That's chapter 6, also covered in chapter 6. We can say profit is 100K, fixed costs are 80K, meaning contribution margin is 180K. 180K. Total contribution margin. Contribution margin per unit is $20. So how many units is this? 9,000 units. Okay, so that's again another way. So we covered it here all three ways, using format, using full equation to derive this formula here, or simply just to use a shortcut, which many of you will use again because you should write it down somewhere and just use it. Question 15. A company manufactures two products, A and B, this and that. What is the unit product cost under activity-based costing? This is the same question as we had earlier, so we don't need to go through. I'm going to just point out two things. We don't need to go through the whole calculation thing and everything, but just to point out things, see how it can be just presented differently. That's all. Just a different format, but same question. So here you have what's the unit product cost? Again, you cannot forget labor and materials for product B, right? For product B. Well, product B, again, direct materials. So you put it right away down. So, you know, you're not calculating for product A and then later you realize, oh man, I have to go back and do the whole thing for product B or something like that. Product, direct materials here, direct labor is 12. Okay. Now overhead is what? Overhead is 240 divided by total. Again, if these numbers are not there, this total, it's not here. You have to add up this here. Okay, So now you have 240 divided by 120, 600 divided by 20,000, 120 divided by 3,000, and you get some rates. You get some rates, which you will find here below. And then you will use those rates to apply them to the products you're looking for. In this case, product B. You will use those rates, boom here, boom here, boom here. You will multiply it, get total numbers, and then divide into total number of units. Total number of units. Because you're looking per unit. Now, how many units are we dealing with here? How many units? The product volume units, 10,000. That's it. Okay, same question as earlier. More practice, different look. Different look. Last year company this and that, based on this break-even point. Okay, very good. I know what I'm looking for, break-even point. I'm looking for contribution margin per unit or ratio or something. Company reported sales of 640, contribution margin of 160. So we have a ratio already. We have a ratio, but we don't have fixed cost anywhere here. We are not given. That's what we need. So we will say, okay, let me do this 640. Here, a VC, I don't care necessarily, maybe, but my contribution margin is 160. Net operating income is 40. Well, if this is 160 and net operating income is 40, then this is 120. Okay, so now we have fixed cost of 120. And we have a ratio of contribution margin is what? 160 divided by 640. That's the CM ratio. And CM ratio is 25%. So we will divide 120 by 25%. So this is the same question as earlier, just you need to know how to use contribution margin ratio, because in this case, we don't have number of units. So we cannot figure out what the cost per unit is to get number of units. But anyway, we asked for sales directly. So, which we could get from units because we just multiply units by price per unit. But in this case, we actually get just straight contribution margin ratio, and we get 480 here as our answer. Okay, are we doing all right? Are we doing all right? Are we still alive?
Yeah, Professor.
Yes.
We're good.
Yes, we're still alive. It's a lot of work to take in.
Yeah,
Okay,
definitely.
great. All right, well, you have a whole week now to do this. I mean, you should be already, you should have covered like up to chapter 4, definitely. But I know you're busy with other things. This is not the only class. I don't expect you to love this, to sleep with this counting 22 or 300, but under your pillow. But now you have a whole week to do chapter 6 and go through these problems and everything else. Question 17. Question 7. Yes, somebody wanted to say something?
Yes, I wanted to ask if because I haven't started with chapter 6 because I had other classes that has exam coming up. So I have questions about chapter 6. If we're not able to get through some of them, I mean by our own, are we allowed to send you our questions via email, or do you want us to do it like in a discussion board or something?
Well, first of all, we are going through these questions now. So you will just look at the review again, right? If necessary. Okay. You can forward it, I guess, and whatever. But the main thing is that you will have to go through the lectures, and because right now you're kind of just getting a very quick overview of things and how to look at things and approach things. You cannot rely on, I'm sure some people will, but that's their problem then. Or if they're, if they can do well, good for them. But you have to go and look at the chapter 6, both lectures and exercises, and do the homework, and then go through these problems on your own, and then maybe go back again and do this. But yes, of course, you can always post questions on the discussion board. Yes. That was kind of a short answer. That yes, you can, of course. But I'm saying it. If I say yes, then it's like I'm going to just post questions. You have to do all the work before that, because otherwise you will not understand things. That's my concern.
Yeah, that's because we have to do some of the work, most of the work on our own, because of course the questions are not going to look the same. Sometimes the questions on the exam are very different from review. So I'm asking that when we start, doing things on our own and doing a lot more, when we have questions, that's ideal to ask and post it.
Oh,
right?
yeah, absolutely. Well, that's why we have not just discussion board, email our teaching assistants, get office hours or whatever. I don't know if there's a lot of time now left, but anyway, that's the
Okay,
procedure.
thank you. Great,
Sure.
thank you, Professor.
There is also tutoring sessions
Yes.
on accounting. If anybody needs help, they have tutoring sessions one-on-one.
Yes, we do. Question 17, how much was the company's adjusted cost of goods sold? You see, this very small question here, it looks like, but everything is packed here into this question, everything. The whole chapter 3 is packed into this question. So this is a very good question. So what do we need to figure out cost of goods sold? Well, we need to figure out what went into work in process, what went from work in process to finished goods, what went from finished goods was sold, and then what's the difference between applied and actual. So we will then adjust the whole thing. So we need to know whole chapter 3, right? Okay, let's start. Again, what do we need to make a thing? We need materials, labor, and overhead. Which overhead? Applied overhead. It's predetermined overhead based on cost formula estimated 135,000 of manufacturing overhead, estimated allocation base of 90,000 direct labor hour. So you see here, machine hours or labor hours are not the base, but the dollar amount of 90,000 of direct labor is the base. Do not get confused by this. That's so what? That's the base. The base is 90,000. So we will find our POHR, okay? And our POHR will be $1.5 per direct labor dollar. We will apply now this POHR to this should be on the second line, applied overhead. We will apply it to our products. How? By the amount they used of direct labor cost. And direct labor cost is here, 100,000. So we will multiply 1.5 by 100,000, we will get 150 in overhead applied. Okay, so that's good. We have overhead applied of 150. That's one thing that we need. What else do we need? We need materials. Okay, what are the materials? Materials were at the beginning 29. Did we purchase any? Yes, 130. All right. 130 plus 129 is what? 159. And we had at the end 11. So we used 148 of direct materials. That's here, 148. We are already in the work in process account. We are applying this stuff. So we send 148 in direct materials there because they're all direct. We also need to send some labor, which is 100,000. We will send some labor, 100,000. And we will send, what did we say? How much of 150 of applied overhead, which was here. So that's 150. So we are sending 398 to work in process. 398. Well, 398 plus 45. So 45, 398 is what? 13, 14, 443. But at the end we had 36 here. minus 36. So we have here what? 7, 0, 4. 407 in working in cost of goods manufactured. These are the units that are finished. 407. They are here. We will send these units to where? To finished goods. Finished goods beginning was 71. We will send 407 there. That's 478. And at the end, we had 61 here, minus 61. If this is going too fast for you, then you're not still comfortable with chapter 3, right? So you need to go and look at chapter 3 and practice problems. But these are, what I'm doing here is the basic just inventory accounts calculations, beginning inventory plus additions minus ending inventory. So we have here 7 and we have here 1, 417. These are our cost of goods sold. Cost of goods sold, 417. Now we are asked, we need to adjust them. This would be the answer if the question is unadjusted, cost of goods sold, 417. But we need to adjust them. How do we adjust them? We look if we over or under applied. How much did we apply? We applied 150 here. It's 150. 150 applied. How much was the actual? It says here 110. 110. So the difference is 40. Because we applied too much, 40, we will deduct here 40, minus 40. And we will get the answer 377, which is the answer here. Right, so this is a great question. It takes a little bit of time. Of course, I'm going here very quickly, but it would take you probably a little bit longer. But the bottom line is kind of very straightforward if you know what's going on. Now, it's a little bit kind of just difficult to identify all these things here, to identify them and say, well, first, this allocation base sounds funny. It's in direct labor dollars, so you have to identify direct labor dollars here of 100 to multiply your POHR, right? Identify later these manufacturing rewards, actual, see actual here underlined. So you know this is actual. You will compare it to this 150 here, which is just applied. But this is a very good question. This is a very good question. Okay, any questions?
Professor, I have a question regarding the handwritten work.
You have a question about what?
About the handwritten work that we have to upload after the exam.
Okay, let's finish this review and then we'll discuss any other questions that you might have. Question 18, the work in process inventory account. Okay, let's jump straight to the question. From this information, it appears that the company is using a predetermined overhead rate as a percent of direct labor of what? Well, what is POHR, right? What is POHR?
Determined overhead rate.
POHR is predetermined overhead rate. Somebody's saying POHR is equal to total estimated overhead over total estimated base, right? So now what do we have here? Shows a balance of 2,600 at the accounting period, work in process inventory. Okay, somebody asked this question, I think, in one of the reviews or something similar to the homework. The job cost sheet of 2 uncompleted jobs shows, okay, so we have work in process account, and the end balance is 2,600 here. The end balance is 2,600. Charges 400 and 200 for materials, that's 600. And labor 800, 3 and 500, that's 800. So this is materials and this is labor. Well, what else is remaining? So this is 1,400 here. And the total is 2,600 of this cost. So the 1,200 has to be 1200 has to be overhead. 1200 in these 2600. 1200 has to be overhead. And if 1200 is the overhead, and we used direct labor dollars as our, so 1200 is the overhead here, and our direct labor cost is what? 800. Then our POHR is 150%, right? Or 1.5.
This is if the Xbox Series X. That's the no Xbox. Looks the same.
Okay, can you please just turn off your, mute your microphones. So we get here 150, right, percent, or 1.5, but we are asked in percentage terms, so that would be 150.
Professor, can I ask you a question?
Yes.
Is there an alternative way of asking that question in number 18? I mean, what is it asking you?
What do you mean? What is it asking? It's asking what the rate of how did we get POHR? That's what it's asking.
Okay.
It's asking how we got POHR. And we always get POHR in the same way. Total estimated overhead over total base, right? And in this case, the base is, 800 here, labor, because that's the base, labor, 800. All we had to do is figure out the portion of these 2600 that belong to overhead, and we figured out it was 1200. That's it. So now we end up with 1200 here on top, divided by 800, which gives us 1.5. 1.5. But because we asked for percentage, then it's 150%, right? 1.5 times 100 is 150%. Question 19, if these changes were made, how much would net operating income increase or decrease? Okay, so let's go back then to beginning. Contribute product, $50, variable cost. So this is chapter 6. We would have to look at two scenarios, current scenario, and then if we make changes. So what's the current scenario? Well, they're selling a thing for 50, variable cost at 10, which means contribution margin is 40. Fixed expense 15,000 annually, and they sell 4,000 units. Well, 40 times 4,000 units would be minus 15 here, okay, would be 145. So that would be our first scenario, 145, okay. Now, if they, this is similar problem to the earlier one, if they reduce price for 10% and increase advertising for 30, we had the same example in our lectures, and increase then unit sales by 50%, what would happen? Well, in this case, we decrease price for 10%, meaning now our price is 45 here. Not 50, but 45. Our variable costs are staying the same. We are not told anything about this. So now 45 minus 10 is 35. So now we have 35 here, not 40, but 35. But we also don't have 4,000. We actually have 6,000. 6,000. Why? Because the unit sales increased by 50%. And then our fixed cost would increase for 30K. Why? Because we are putting more advertising. So 15 plus 30 would be minus 45 here. So what will be the result? The result will be 165K here. So the answer is our net operating income would increase for $20,000. Okay. Okay. Everybody good?
Yes.
That didn't sound very enthusiastic, but question 20. Okay, we are getting close to the end. We are getting close to the end. So question 20. Company produces toys, things. How much will net operating increase if they do so? You should have some fun with this, especially with chapter 6. It's a lot of fun. I mean, you see really how things behave. You want to know how much you make, right? As managers, or how much things cost you in profit. Maybe, you know, overhead. I understand it's not very exciting, but chapter 6 is very interesting. And chapter 6 concepts, not break even and margins, but again, contribution margin, we will use for the rest of the class. So how much will net operating income increase? This is again the same thing. We don't need to go through this whole thing. Same thing as the previous problem. So we would do scenario 1. Well, what's the current NOI? It would be 792, right? And then we make these changes here. We make these changes, same like in the previous problem. So the new NOI would be $1,001,200. So the increase will be $209,200. Right? So we don't need to go through the same procedure. You can look at it on your own. 21. What is the amount of over-applied or under-applied overhead? Well, that's fun. That's fun. So we need actual and we need applied. What's going on? Always same procedure, same basics. At the beginning of the company uses direct labor as allocation base. Okay, important. The beginning of the year, the estimated direct labor hours were 1,500. Total estimate manufacturer 30,000. Okay, so this will give us our POHR here, $20. 30 divided by 1,500. This is what we need. Now, what else do we need? We need actual hours, which are 1,300. We will multiply these 20 by 1,300. That will give us $26,000. So this would be, again, another like free question, very basic question. And the actual manufacturing for the year was 29,000. So 26,000 applied, actual 29, under applied for 3,000, right? We did not apply enough. We actually spent 29,000, but we only applied 26,000. Very basic concept from chapter 2. Company revealed the following figures. How much is the company margin of safety? Margin of safety, we know what margin of safety is. Current revenue, which we have here, 840. And break-even revenue, which is what? Break-even revenue. Well, let's see what we have. We have sales revenue 840, we have contribution margin of 504, we have net operating income, which means our fixed cost is what? 504 here, 504, something is in between here, 504 and 54. What is in between is fixed cost of 450. 450. Very good. Now we have 450 in fixed cost. We also know that our same problem as earlier, basically our ratio here is 504 CM ratio to 840, 60%. We don't have units here, so again, we cannot figure out units. I know some people like to work with, I like to work with units, but we don't have units here to figure out, let's say, contribution margin per unit. but we will use ratio. So we have 60% ratio here, and we will simply plug in 450 into our formula, fixed cost divided by CM ratio, fixed cost of 450 divided by CM ratio 60% will give us 750 in break-even sales. And if we have 750 in break-even sales and 840 in regular sales, that means that our margin of safety is 90. Again, this is chapter 6. I understand if you didn't cover it, but you have to cover it, right? You have to cover it. You have to know what margin of safety is, what break-even is. All right. And final problem I actually covered in detail in narrated exercises, and I would strongly recommend that you go over that exercise. This is a kind of a long, somewhat complicated problem, but very straightforward too. Once you know how things behave and how to approach things, different people will approach it differently. I covered it in both ways in narrated lectures, so I want you to go through narrated lectures. Narrated exercises. This same problem. Here we'll just cover it in a straightforward, simple way. So we will say the question is here for maintenance, not for the total overhead cost, because this is the total overhead cost. And of course, we would use high-low method, right? Even if we are not told, use high-low method. We know that we have a bunch of numbers here, so we can use high-low method. But actually, we are not asked for the total cost, overhead cost, to figure out what fixed and variable portions are. But we are asked for this maintenance. So that's kind of step extra. Now, some of you will go through total, which is possible. But again, for that, I want you to go to narrated exercises. That's chapter 1, if you want. But here we'll just find actually what maintenance first is, and then we'll just do the high-low thing. So how do we find what maintenance is at 7,600 machine hours? 76 is nowhere here, right? Well, we are given at low activity what maintenance is and other costs, variable, salaries, maintenance. It's 7,000. So now we need another point. And what point do we want? Well, we want the high point, right? High-low. So here we have 4,000 low. We want it at 7,000. Okay, we want it at 7,000. So how do we figure out at 7,000 what is maintenance? Well, we can figure out, first of all, we say total overhead cost at 7,000 is 28,750. So we have that piece of information. Another piece of information is that we have these are the fixed cost salary here. So we will put here 4,000 because it's fixed. It will stay the same. Now, what are the utilities? They are variable. So how much are they at 7? Well, they're variable here. So how are they variable per unit? How much are they per unit? Well, 8,000 is total. 4,000 machine hours. So that's $2 per unit. So if it's $2 per unit, then times 7,000 here, it will be $14,000. So you see, now you have your maintenance. So now you have here 14 and 4 is 18. And here you have 28,750. So your maintenance here will be what? 10,750. 10,750. So that was really the kind of not the trick, but the thing to do in this problem. Now, when you have this, you just use your regular high-low, and that's it. You just say, well, 10,750 minus 7,000 is 3.
How did you get the 10,750?
Well, I just explained it, so you will go back to the review. So that will be 3,750 divided by 3,000, right? Divided by 3,000. Why 3,000? 7,000 hours, 4,000 hours. 3,750 divided by 3,000. What would that be? Let's see. That would be 125 per machine hour, which is here. We can see it here. 125 per machine hour. So we will get here 125. 125. This is our variable cost per unit. And again, we will just now use our regular high-low method that we know how to use. We will just plug it into either 4,000 or 7,000. We will multiply 125 by 4,000 or 7,000 and then find the difference between this and depending on which one, not these 7,000, these are dollars, but these 7,000 machine hours. And then look for the difference between whatever the amount we have. And so let's look at down below. Let me erase this first. Let's look at down below at just how numbers work. How numbers work. So we have here 125. In this case, I used 4,000. So we will say 125 times 4,000 machine hours. But at those 4,000 machine hours, we had total cost of 7,000, right? It was here. Remember, we are focusing just on maintenance, not on this here, not on this, right? So that's 1.5, whatever it is, times 4,000, that would be $5,000. 7 of total minus 2, again, just a regular, straightforward, high-low. So that would give us fixed cost of $2,000. If you try to plug in 125, not plug in, but use 7,000 machine hours, you will get the same $2,000 in fixed cost. And that's your formula, right? That's your formula now. $2,000 of fixed cost plus 125 per machine hour. And now you can find any amount at any machine hours, which is here since. Now, yeah, again, this is chapter 6, so it might be difficult to follow because you did not cover it yet. But this is why you will go to, of course, lectures, but also through narrated exercise and specifically this problem, how to find. For the person who asked, how did we get amount of maintenance, then, well, we said we had high-low, we are using high-low method here, right? So these amounts here are given to us at 4,000 machine hours level. So another level would for us be 7,000 because that's the high in this case. Well, at that high level, this is the total, not 19,000, but 28,750. And what goes into these 28,750 is utilities variable, which would be variable. So I'll let you find out what variable is per unit, and then what the total variable is in this at 7,000. And then fixed will stay the same. It's fixed. So basically you have this amount, you have this amount, and you have the total amount, which is this. So the only difference here can be this, which was, we said 10,750. So this is how you find maintenance. Again, some people will find this same formula here by going to total. I'm not going to go through it here. It's a little bit more, maybe less intuitive, but it works for some students. But I covered it in narrated lectures, so you should go through it in narrated lectures. Again, this chapter 6, I did not expect you to, but we had to do the review a week earlier. Basically, there's not much time. Then we weren't going to do it on Friday or Saturday next week, day before the exam. So now you can go and cover chapter 6. All right, so this would be, let me stop this thing. Let me stop this thing.